The strategy I'm about to teach you works on all time frames, but I suggest to trade with this strategy on the gold chart and the 15-minute time frame, because I've made a lot of profits by trading with this strategy on the gold symbol. For the first indicator, add the Ichimoku cloud indicator from the indicator section of TradingView. The indicator makes the chart a bit messy, but don't worry, because we do not need all options of this indicator. Therefore, go to the settings of the indicator and in the input section, let the options to be in the default settings. But in the style section, we only need the conversion line and the leading span A. So disable all other options. Then you can adjust the color of these two lines as you desire. This blue line on the chart is the conversion line, and the white line is the leading span A. When the conversion line, which is the blue line, crosses the leading span A, which is the white line, upwards, a buy signal is issued. And also, when the conversion line crosses the leading span A downwards, a sell signal is issued. But wait, you shouldn't trade with this strategy yet, because this trading setup is not completed yet, and many fake signals may be issued when the market moves sideways. But before completing this strategy, you can join our Telegram channel to trade with our strategy and to recap all your losses. The link of the Telegram channel is placed in the description of this video. Well, now search in the indicator section of TradingView and add moving average convergence divergence to the chart. We'll use this MACD indicator to filter false signals. But before using the MACD indicator, some changes need to be made. So go to the settings of MACD and in the input section, set the fast length to 100 and the slow length to 200. And also set the signal smoothing to 14. Then in the style field, we only need the histogram option, so disable all other options. Then change the color 0 to green and color 1 and 2 to white. And finally change the color 3 to red. MACD indicator works in such a way that if the histogram is green and above 0 level, the buy signal is confirmed. And if the histogram is red and below the 0 level, the sell signal is confirmed. Pay attention that when the MACD histogram is white, you should not enter into any trade. In this trading example, with this upward crossing, the buy signal has been issued. And if we draw a vertical line on the signal candle, the MACD histogram is also green. So the buy signal has been issued and it is confirmed. And in this trading example, with this downward crossing, a sell signal has been issued. And if we draw a vertical line on the signal candle, the MACD histogram is also red. So the sell signal is issued and it is confirmed. Here the market has been moving sideways and many signals has been issued. But you can see that the MACD indicator has carefully filtered out all these false signals. This has made the strategy a very accurate strategy even when the market moves sideways. but you still have to wait until the strategy is completed. But before that, if you have learned something useful by this video, click on the like button and be sure to comment your opinion. Well, now we're gonna add the third indicator called trauma to the chart. Now from the settings of this indicator, change the length to 200 and select its color as you wish. So when the price action is above the trauma indicator, we should only enter into buy trades because we are in an uptrend market. And also when the price action is below the trauma indicator, we should only enter into sell trades because we are in a downtrend market. Then now the strategy is completed. So let's review the rules of entering and exiting a trade. So in order to enter a buy trade, a buy signal with an upward crossing should be issued first. After that, note that the price action should be above the trauma indicator. And finally, the MACD histogram should be green. If the issued signal has all these conditions, the signal will be approved. The close price of the trigger candlestick is the price to enter a buy trade. And place the stop loss where the crossing of conversion line and leading span A has occurred. Set the target for scalping trades at 1.5 times greater than the stop loss. And in order to enter a sell trade, a sell signal must be issued with a downward crossing. After that, note that the price action should be below the trauma indicator. And finally, the MACD histogram should be red. If the issued signal has all these conditions, the signal will be approved. The close price of the trigger candlestick is the price to enter a sell trade. And set the stop loss when the crossing is happened. Set the target for scalping trades at 1.5 times greater than the stop loss value. Pay attention again to some trading examples in the sideways market. MACD and trauma indicators identify and filter all false signals with high accuracy. But if you're still losing in your trades, be sure to watch this video.